Why don't we start with the initial public offerings? Last week, the IPO experts at Renaissance Capital, thank you so much, people, published their first quarter review. And this document was chilling. Listen to this. Quote, explosive IPO market delivers the busiest quarter since 2000, end quote. When the dot-com bubble burst back then, it was the stock glut that pushed us over the edge. So you never want to see this kind of comparison. It's been 20 years, but I managed to flag that then. I'm flagging this one now. The first quarter isn't even over yet, and we've already had more than 100 deals. That's just regular deals. It doesn't include the nearly 300 SPAC offerings. We'll get to those in a minute. In terms of the amount of money raised, this was the biggest first quarter for the IPO market in history, with tons of tech and healthcare deals. And there are a lot more on the way next quarter. You can tell there's too much supply because many of these deals have started to fizzle. According to Renaissance, the average IPO returned just 8% this quarter. Now, just look at it last week when we had 17 traditional deals, which ties the record, by the way, for the biggest week in history. And you don't want that record. More than half of these broke down below their issue price on day one, and that is shameful, Wall Street syndicates. You had Digitalocean, a cloud infrastructure platform for small and medium-sized businesses. Now, this is the kind of deal that Wall Street couldn't get enough of last year. Last week, though, Digitalocean priced at 47, then opened at 41.50. That's an instant money loser. It's now at 40 after another bad day. Cry me an ocean. You had Zoozee Holdings, which is a cleaning and hygiene company with both products and services. Might have been a great last spring at the height of the pandemic name, but there's no appetite for that now. Zoozee priced at 15, $3 below the bottom end of its proposed range, then opened even lower at $13.50. It's rebounded just under 15 now, though that doesn't really inspire a lot of confidence as far as I'm concerned. Then there's Zoozee. It's a Chinese internet play that opened down 15%. Now, how about Alignment Healthcare? Senior health play with a technology kicker. This thing came public at 18, opened at 19.05. Hey, it went up, but by the end of the day, it was down 17 and change. Today, the stock made it back to 19, which is the high end of the original range, not exactly cooking with gas. Meanwhile, we're still getting tons of low-quality Chinese IPOs. Now, I've been warning you away from these for years. No one listens. These typically perform worse than their American peers. No one listens. It's like the Golem. I'm not listening. I'm not listening. I'm buying Chinese IPOs. The pattern hasn't changed, especially now that the Chinese market's rolling over. Their stocks are, hey, got to tell you, the stocks of China, it's the lowest quality export that we get. Making matters worse, the spigot is still open. We've got 8 more deals expected this week, 2 per day. If that's not enough, next month's Coinbase, the cryptocurrency exchange platform, is doing a massive direct listing. No lockup on insider selling. That means something like $90 billion worth of stock could be about to hit the market. I don't care how much you like Coinbase. The market doesn't have a place for that. Of course, not everyone will sell. But if 30% are in the register, that would put this at the same level as the largest IPO in history. Regardless of how you feel about Coinbase, that's a lot of stock. Doesn't help that Robinhood's IPO is coming up too. Whoa, that's irony, right? We don't know when that'll be. If it comes anytime soon, I think it's a tough swell, given that so many of Robinhood's younger clients are now fleeing the market like mad. And remember, I noticed I didn't say rats from a sinking ship. I did not use that analogy. I want to repeat it. I didn't use it. The traditional IPOs are only one part of the stock glut.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.
Shepard Smith here. Thanks for watching CNBC on YouTube.